We said we wanted to grow mobile data, and we've done that. So we've added 25% new data customers. They are now sitting at 13%. And it means that 76% of our 30-day active base are now using mobile data. We provided much more value in data, and data is now available as low, depending on which bundles you buy, as low as 33 cents per MB, and which is a 30% reduction on same time last year. And I believe it is amongst the cheapest, if not the cheapest, in Africa, if you look at our average price per data compared to the average African price per data. And that has meant we've now driven an increase in data usage by 78%. Smartphones is, of course, the key to access data, and we have grown that by 33%. We now have 4 million smartphones sitting on the network. Smartphones are now coming in as low as $40. Rewarding and delighting our customers, we have really been focused on recruiting, as you've seen from the addition of the 3.25 million new customers. We have focused on retaining those customers, and of course, we focused on rewarding those customers. What we've done is achieve the market share of around 6 to 7% customer market share. We've managed our churn. Churn is actually down to 14.3%, which is a 6% reduction on the previous year. And we have made increased SMS penetration by making more affordable bundles. We've also made it easier to access self-care, and we are getting much closer to the customer by introducing what we call care desks in our dealer network, so you don't just have to rely on going into Safaricom shops. Deepening financial inclusion, of course, is at the heart of what Safaricom does. Our M-Pesa customers has grown by 11%, and they now number 22 million customers, which is equivalent to about 88% of the total customer base. And our active customers, these are people who've used M-Pesa in the past 30 days, is now at 15.7 million, which is an increase of 23% on the previous year.
From this chart, it's clear that we continue to achieve good growth across all of our service revenue segments and achieved a compound annual growth of 15% each year over the last 4 years. Voice revenue grew 3.5%. If you recall, in the second half last year, it grew 1.8%. So we have turned around the voice revenue growth. And that's been driven by the 15% increase that we've had in the customer base since the same time last year. That's another 3.5 million customers. We continue to improve our airtime distribution. Our scratch cards are now available in 284,000 retail outlets. And the uptake of emergency top-ups, or Koa Jahazi, continues to grow and realise a revenue growth of 21%.
5.5% growth may not seem all that much today. When the first Kenya Development Plan was prepared, it actually aspired to achieve a 5% rate of growth, of economic growth. So you can see that growing at 5.5% is not a disaster. We would like to see the economy go back to 6 or 7%, and we do hope that with all the actions being taken, we'll revert to this more rapid rate of growth.